Good morning and welcome back to Almus Market Mornings. The art of the deal. I think that's what each world leader, especially the Europeans, must find themselves reading. For those out of touch, The Art of the Deal is a book written by President Trump on business negotiations and has widely become a recommended read due to its ability to give an insight into the inner workings of the president. As of now, things between Europe and US seem to be deteriorating fast. The new threat of tariffs is not welcome, and of course, Europeans are trying to decide on their countermeasures. This has broadly resulted in a risk-off sentiment. Gold and silver, which looked to be correcting on Friday, have bounced up sharply today morning to fresh all-time highs. Good morning, JK. I think one of these days, instead of this podcast, we will need to do a book summary on Art of the Deal. What do you say?
Good morning, Swaraj. Yes, definitely. I think every other day we are, um, you know, coming across a new, negotiation where US is involved. And this week, the past week was no different. And probably they have to rename the book as Art of Making the Deal at the highest level. So because this is what we are seeing is not just between two businesses, it is all between countries, it is between regions, and geopolitics at the highest level. So that's what it is. Yeah, you're right. I think there's something that if you go through this book, perhaps you would know what is next coming from Trump, depending upon the global situation. Yeah, I think we are also looking at, we have had a lot of data last week from the US, Europe. But again, as I repeat, it is like last week, this data has become kind of sideshow, and market is more focused on what's happening on the geopolitics and the latest salvo from Trump came in the form of a threat to impose tariffs on European countries, uh, which is closely linked to Greenland, uh, because these countries have been supporting Denmark's refusal to permit US takeover of the territory. He has said that there will be a 10% import duty on goods from 8 countries, including UK, and they will go to 25% from June 1. Now, that of course, Europe is also now, indicating that they could retaliate. The severest retaliation was suggested by France, who said that we should, go back on the trade deal. Cancel the trade deal with the US and perhaps stop access to the US to European markets. And of course, slightly more modest proposal has been to, impose some tariff of up to 93 billion from European side on the US side. So that's the latest. And last week we had also heard about Trump wanting to impose a 25% tariff on anyone who is dealing with Iran. Since then, of course, there has been some mellowing down of their rhetoric against Iran. He had said that he will not be attacking Iran, and also there was some reversal on his stand about Powell. Now, speaking of Powell and the Fed, there is also an idea or a thought process emerging that Kevin Hassett, whose name was earlier very seriously proposed as the next chairman, may not become the Fed chair. So that was, seen. He was in fact seen as the least independent candidate for the Fed post, and which means that we could see the rates not moving so much lower as the market had discounted. But again, this is a very evolving thing. Who knows? Trump might actually fall upon another guy who is even more less independent than Kevin Hassett. So but market is definitely slightly reacted to that, and the dollar tended to slightly strengthen on that basis as well. There's also, another global move where U.S. officials have floated the idea of broadening the Gaza peace plan into formation of a board of peace, and to enroll a lot of countries as a member of that board of peace. And they have in fact plans to expand the scope of this Board of Peace action into other regions like Ukraine and Venezuela. Invitation has been sent to the Indian government as well to become a member. For becoming a permanent member, they need 1 billion to be paid upfront. Again, it's like a business deal. The fear by some analysts that this could actually be an attempt to form a new organization or as an alternate to the United Nations as well. I think these are things that market is looking at very closely. There's one more thing that the market would be looking up to is the World Economic Forum that is starting today. In Davos, and this is a forum where the world's biggest names are getting together for a meeting, and in the current environment, it's in the geopolitical and the economic environment. This is actually becoming a very important forum where even Trump is attending. Last time he had not attended this meet, and this time he is likely to attend the meet as well. So a lot of things behind the doors discussion. Maybe there will be some official forum, but market would be interested to see what kind of discussions happen between business leaders and the economists, as well as the politicians of the big nations. These 3 days of deliberations will be very closely watched by the world markets as well. This is also a forum sometimes Powell or the Fed chairs have used to indicate a shift in their monetary policy stance or a new approach to monetary policy stance. Average inflation targeting was one of those things that we had heard at this forum. So a lot of focus on this as well. We have had the dollar slightly strengthened last week based on stronger economic data. At the same time, we had also had data from Europe and UK, which has been better than expectation. Eurozone industrial production was rising. Then, of course, Germany posted 0.2% growth in 2025, full year 2025, which had beaten the expectation. Month on month growth in UK was also better at 0.3% versus 0.1% that was expected. So there is a certain improvement in the data all across the regions. Of course, all focus will be on what the next approach to US monetary policy would be. Right now, it does look like, up to the middle of the year, definitely there will be no cut in rates by the US, while some analysts are feeling that there may not be any cut at all in the year 2026. A lot of focus again turns to Japan. Japanese yields have risen again to a new high for the 10-year tenor. And a 30-year is also into a new high. What's happening is that as Japanese yields move higher, the difference between the US and the Japanese yields are narrowing. You may actually see some sort of a reversal in the yen based on the yield attraction in Japan itself, because uh, if particularly if the US cuts rate again for whatever reason, and that can actually narrow the difference even more. You might as well see the Japanese investors selling off their bond investments abroad, and get, when the dollar is strong and you can get more yen, and then you invest into Japanese bonds. Now 30-year Japanese bonds are yielding over 3.5%, and it's a very attractive return for Japanese huge Japanese pension funds. So this is something that could happen even without an intervention. You could see the Bank of Japan achieving its objective of arresting the weakness in the yen. So this is some space that we need to look at very closely. And of course, there are some Bank of Japan officials who are indicating that there could be a next rate hike by Bank of Japan much earlier than what the market is expecting, perhaps as early as April this year, and that's actually going to add to Japanese yen strength as well. So Japanese yields and Japanese currency And what Japanese investors do will be another focus for the markets as well in the coming days. Meanwhile, Chinese key data have been announced. You say industrial production as well as GDP have beaten the forecast. So Chinese yuan should be on its gradual strengthening trend will continue. Even the Chinese central bank has been fixing the yuan a bit stronger almost every day, despite what is happening in the dollar index. Rupee, of course, is charting its own path. We are almost near the all-time low for the rupee on Friday, trading as high as 90.87. Highest has been at 91.07. This was on the back of a lot of short covering that happened after 9050 broke, and once the RBS swap of 10 billion for 3 years that concluded on 13th January, a lot of markets dollar liquidity has been sucked out, and markets has rushed to buy back dollars, and imported demand is quite consistent as well. uh, while the investment field has seen the FI numbers continuing to be negative. 2.3 billion of outflow already seen. Stock markets are not really following the steadier and stronger trend followed by the global markets. From an investment perspective, India is still gross underperformer, both in the currency as well as in the in the space of stocks. Of course, we will see some sort of a hesitancy around 91 for the market to buy the dollar. We could see some consolidation here, awaiting new developments either on the trade or on the US monetary policy. I think we are on the wait and watch. Of course, we should mention that technically nothing looks like a reversal in the USD INR. And if we do break 91.10, it could be another quick journey towards 92. Thank you.
Thank you, Jack. And there is lots and lots to look forward to this week and in the coming months, of course. We are paying close attention to how the Greenland issue sort of plays out. That would be crucial to watch. But on the background, we also have on the monetary policy front, Kevin Hassett, whose name was being proposed as the next Fed chair, may not be the next Fed chair as indicated by the president himself. How that pans out, we will see. And there was the Gaza Board of Peace members. US seem to be inviting various countries, including invitation has been shared with India. Some fear this may become an alternate to the UN. We have the World Economic Forum, which is starting today in Davos. Apart from that, when we come to markets, dollar had strengthened slightly last week. Japanese yields continue to be on the rise. There is a shrinking yield differential between various countries and Japan. Rupee, of course, charting its own territory. We are near all-time lows against the dollar. We traded as low as 90.87 against the dollar, with the all-time low, of course, being at 91.07. So we'll see how all of this plays out. Gonna be a very interesting week ahead. That's it from us today. Thanks for listening. We'll catch up tomorrow with a fresh round of updates.